Guys, thanks for sticking around. It's always fun going on right after a panel. I can say I am a bit optimistic, so hopefully we'll start on an optimistic note here. Only have 10 minutes, so I'm going to be fairly quick. Western Copper and Gold, very straightforward, simple story. It's a copper story. We've got one asset, which is up in the Yukon in Canada, northern Canada. It's the Casino mine that you see here. It's a great place to build a mine. Can you throw? Sorry. Yeah, thank you. It's actually it's cold up there in the winter, but it's semi-arid and it's gentle rolling hills. It's a good place to build out a mine. If you're going to make an investment decision, please read this before you do so. So, just a little bit about the share structure. We've been around for a while. This is, I think, our 13th year. Got 100 million shares that are out. We're trading, having a good day today. I think we're at $1.14. So it gives us about a 114 million market cap. The share structure, we're actually fairly tightly held. Our chairman, Dale Corman, owns about 7%, and then a group that we call private high net worth investors. There's about 8 people that own just under 50% there. And these are longtime shareholders that have been following Dale for his entire career. Dale's big win was Western Silver Corporation. We were a spin out of that transaction with the Penasquito deposit. There is a NSR on the property, and Cisco bought that last year. So headline numbers there, we got 8.9 million ounces of gold in the reserve, an additional 9 million ounces of gold in the inferred resource, 4.5 billion pounds of copper in the reserves, and an additional 5.4 in the inferred resource. So it's large as a gold deposit and as a copper deposit. By way of revenue, we're about 50% copper, just under 40% gold, and there's a chunky bit of moly that nobody cared about until about 4 months ago, because it's on a pretty good run here. In terms of production, you've got in the first 4 years 111,000 tons per year of copper and almost 400,000 ounces of gold per year. So if we had one slide, and almost every copper company has this slide. I've stolen it from Rio Tinto, but really it's a Wood Mackenzie slide talking about the supply and demand of copper. And we're in an interesting situation right now. This is why you invest in the commodity cycle. I've been talking about this slide for 5 years. It's just nice that it's finally happening. And what this is showing here is an overall world demand of about 1%. 50% of that is coming from China, which has 2%, and that's flat growth in the rest of the world. And what's interesting is this is not accounting for the potential for extreme growth coming from the electric vehicle situation. A lot of headline numbers kind of drive the price of copper, but really it's the supply side that we're looking at. And if you project out, what do they have there, 2027, you're going to need an additional 5 million tons to fill that gap. Now, Casino is a large copper deposit, and you're going to need 65 mines the size of Casino. And the reality is it's happening now. And the majors, it's an interesting time as an investment thesis, because the majors are all saying we recognize that this gap is emerging, and we know we have to fill the pipelines or find new discoveries, but you haven't really seen that M&A occur, although you saw a little bit with Lundin a couple of weeks ago. And so we went and did a little exercise, and I'm sure I'm missing one or two, but we put every project that we could think of that's primarily still controlled by a junior, and we came up with about 20. And we used everybody in there. So there's some dogs in there. There's a number of them that are not economic at today's prices. Some have significant environmental challenges. And then you've got our project, which is part of the very small handful of projects in a good location that's economic today. In terms of size, just the gold, we're almost the size of coffee, and I bring that one up because it was sold a couple of years ago. It's our neighboring property, and we're about the same size as Metates. In terms of a gold equivalent basis, we're larger than Donlin Gold. I talked mostly about the copper, but we certainly do have a large amount of gold. So you got a significant resource, 100,000 tons per year of copper, 400,000 ounces of gold in a good jurisdiction that has been ranked as the most economic copper deposit the last 2 to 3 years, #1 by Goldman Sachs. and we're going into a commodity cycle where this gap is widening. So we're pretty excited, we're optimistic about what this next year will bring for us. Quickly on the team, the big win was Dale Corman with Western Silver. He sold his last company for $1.6 billion. Cameron Brown, who's our engineer, former project manager for Bechtel, has built large project, built out Los Palombres on that. So we've done a full bankable feasibility in 2013. We've been in permitting now since 2014. So we've had 4 years under our belt, 2 to 3 more years to go. The Yukon, the good and bad of the Yukon is they permit mines there, which is the good. They have a miner on their license plate. They're pro-mining. The First Nations have signed land claim agreements. It does take time, but it's a straightforward process, and we're more than halfway through at this point. A little bit about the deposit. We've got a gold cap on top. It's a traditional weathered porphyry. Kicks out about 80,000 ounces of gold doré per year for the first 17 years. Then you get into kind of the light orange there. Higher grade for the first 4 years. It's about 0.7 copper equivalent for the first 4 years. And then the 22-year mine life, you got 0.5% copper equivalent. If we put a pit around the inferred, it brings the mine life up to 55 years. And it is open at depth, and there are some other targets that we've looked at. It's expensive drilling, so we won't be doing that, or no plans to do that in the next year or so. But there's some upside. And the economics are good. I mean, you're talking about a $115 million market cap company with an NPV at spot pricing here of $2.8 billion. After-tax IR 25% and payback of less than 2.5 years. And coming out of this downside, it's always nice to look at what we could end up at, but really through the entire down cycle, last 5-6 years, the lowest we got was a 15% after-tax IRR. So it would have been economic at every point in that cycle. Talked a little bit about the high grade early on. The other key that really makes this project work is the strip ratio at 0.59 to 1. It's really best in class. So a couple things that people often miss when they model this project. They put the copper and the gold. They forget the moly, which is a chunky bit, and they don't see that our costs are extremely low due to the strip ratio. A couple ways of looking at the cost. It's fun to look at net of byproducts because they're negative. A better way to look at it is on the co-product basis, where you get $1.43 to produce a pound of copper, and you've got $633 to produce an ounce of gold. CapEx, about $2.5 billion on that. This slide is showing capital intensity, kind of middle of the pack. Half of those projects are north of $2.5 billion. It's a 2013 study. We've internally repriced that, and it's come down in US dollars and would have gone up in Canadian dollars now that the exchange is a little bit different. And these two handsome guys, that's our Prime Minister, Justin Trudeau, and the Premier who came out to the Yukon in September. He pledged about $500 million for some infrastructure in the Yukon. $130 million of that is earmarked for a road called the Casino Trail, Casino Road. So that's a direct benefit to our project, and it gives us endorsement at the federal level, the territorial level, but most importantly, when you want to look at what social license is like, the First Nations had to sign off on the road as well. It's called the Casino Road, so there's no doubt that it's going to a mine. So just quickly about the Yukon, it's attracted a lot of money over the last couple of years. All gold company, Goldcorp is right beside us as well, but a number of other majors have moved in there. It's a good jurisdiction, it's attracting money, and it's a place people want to build mines. So we're at a point right now, we're seeing corporately, finally, major copper companies and the smelters are knocking on our door after 5 years of not hearing from any of them. But there's a real disconnect between our market cap, our valuation, and the interest that we're hearing yet. Funds are just starting to really see this gap and coming in. I really think we're at the beginning of another strong cycle here ahead. So there we go, right on time. So thanks, guys.